In the US, the inflation is turning around, albeit slowly. So Gary Glover is going through and showing us some growth names on the ASX today to really understand the opportunities that are in front of us on our market. And that he'll also go through some leading indices to show where the breakouts are occurring in the US and where the Australian market is still differing. Good morning, Gary. How are you?
Yeah, I'm good, Chris. Yourself?
Well, we've got growth, as you said before recording. You said, look, maybe it's a little bit early, but it's worth addressing, having a look at and seeing how they're moving, because we don't want to get to it too late and say, oh, there was an indicator or there was an early one. So I suppose you'll be doing that for us with some big names today to show us how they're setting up and what to look for.
Yeah, look, I think the market, particularly the US market now, is sort of seeing that inflation, has continued to sort of keep moving down, even though it's sort of a bit of a slow process. So that's probably good for US rates here. Probably, I think most are believing that US rates is now peaked. We said bond yields has come up a little bit there. I doubt whether the Fed's going to move too quickly here. In the past, there, if inflation's pretty high there, if they cut too early, inflation's come rearing back here. But it does indicate that the market does sort of see that that rates is going to probably slowly move lower here. But I think it's probably early to mid next year before we see rates lower. I just don't think power's going to move too fast. In the past, the central banks have moved too fast, and inflation's come rearing back here. So power's made all the right moves here so far. It's actually learnt from history, which is whereas obviously we've got high inflation here still in Australia here because we've been a little bit slow to move rates higher here. But what that means for markets is that it normally sort of markets that are interest rates moving higher, they tend to sort of underperform, and then when the rates are sort of flatlining or basically moving lower, markets usually perform a lot better in those periods that you can go and look at yourself there. But the performance of sort of an easing cycle there is positive there. So even though we're a little early here, that is sort of good for equity markets there, and that'll get the market excited. And the market will think rates are going to get cut early, even though they won't. But that'll be good for equity markets anyway. So just seeing here, the NASDAQ is probably that index that's also held up the best, Chris. It's had probably the most sort of squarest sort of decline there. So like a little cup and handle, like a little pennant flag here. That's kind of more of a sort of square, sort of sideways orientation, and now we're sort of broken out of that. So it does look pretty positive there. So I think the market's going to kind of run here until the end of the year. There, I think it'll probably get some resistance, go back and retest that that little top there in July. Maybe we'll get a little bit of consolidation under the high, and then push through later on. So we'll get a few little consolidations here, but definitely seeing. I think the Russell might have actually gone to a near low and broke back in the range again. So that's pretty good for sort of smaller caps as well. So just might see some of the other sectors start to perform here. So I think it is probably time to start looking at some of those second tier sort of stocks there, sort of growth and mid caps and stuff like that. So, but yeah, that's overall is pretty good for equities.
Okay, so similar sort of thing, slightly different shape for the S&P 500. Trying to possibly come and handle, break out from that channel. It's gone to the upside. You've indicated that here's a bit of the zone, which would be the old high that we saw back sort of March or April 2022. That's sort of the next magnet or area that you're looking for the drive to go to, possibly towards year end.
Yeah, I think so. I think sort of around that 4.7 makes sort of sense here. It's sort of been a bit of a lag on it so far, even though this has been a really quick move here. But yeah, probably get some consolidation at some point there, but looks pretty constructive. I mean, look, I haven't ruled out going to 4.8 here by the end of the year. Actually, I would love to see it go to 4.8 by sort of January, maybe just stay under there. And then we basically sort of, I'm expecting a bit of a negative cycle through the early parts of next year, which would set up for a really bullish sort of second half of 24. So that might be a big cup and handle on on the weekly, monthly sort of setup there. So we get a big, or if we go back to the top here, then a handle into mid next year, and then we pop through after that. Just in terms of the cycles, that sort of matches up quite nicely there.
So that's the S&P. The Dow Jones has been lagging behind. You've put the Aussie in, and then we'll also look at the Shanghai in a second. The Aussie still clearly different. We haven't had that sort of that bullish flag that's sort of a bit of a pause in the movement. We haven't had a clear breakout the same way that the US indices have. We're definitely a long way under the highs, and still a fair way from what you're looking at there, the July highs. The US markets are a lot closer. As you said, similar to the Dow Jones, we're more of a value indices, but today you've pulled out some growth shares in the indices to look at, just lower weighted than a lot of the value shares. Do you see anything different on the Aussie, or it's still sort of playing to that same?
Yeah, look, I guess the Aussie market's still a large sort of sideways orientation, which has, as we inferred before, it is sort of similar to the 40s and 70s, which is quite common in those high inflation periods there. And our inflation is still a little higher than most as well. So we've probably got a few more headwinds there, just because our central banks have been a little slow to react there. But I think we can bounce back up to 7,400. Be nice if we can go a little bit higher by the end of the year. I'm just not sure. So far, we've sort of been a little bit underwhelming, but I think 7.4 is a pretty good target here for around sort of January there. So just that overhead trend line there is sort of something we did break before. I will go back and retest that up into Jan or something like that. So just sort of something to keep an eye on there.
So we're talking growth indices. NASDAQ's definitely more growth than the US. For the Shanghai market, how do you look at that? Or is it completely different? Other side of the world, a lot of FX, kind of geopolitical things as well. Does it fit into the growth risk on, risk off situation, or different dance completely?
Yeah, it's just a market I've followed sort of historically there. Maybe once every 3-4 years it sort of pops up as as a bit of an interesting sort of level there. So yeah, we're just really sort of come back to the long-term support here. Everyone's pretty, obviously being pretty negative. China's coming out, had a really sustained long COVID, lockdown. So much like everyone else. So just really starting to sort of come out of that now. So I think they're just maybe just a bit of a laggard there in terms of economically there. But I think, this looks like a pretty good time to be looking at Chinese equities there. Sort of, property sectors had out of favour there. Long sort of period of COVID there, which has sort of drained the economy. So, still think that economy is still pretty robust here longer term. Just got its issues at the moment, but usually you typically buy things when we're usually at their worst. So, it feels like that's sort of similar the case there to the Shanghai here as well. So, oftentimes, actually, the Chinese government actually sort of operates some sort of stimulus there around these loans. So those are often sort of kickstarted a bit of a move here. So keep an eye out for that. But yeah, just a bit of a key support side for buying here. So the thing I'm looking at there is like the price action is tightening right up here. So it might tighten up a bit longer here. But oftentimes when we see those little tight patterns there like that, we often see a breakout. But once you get a breakout, that's when you can get a basket order. So still might see a bit more tight to go on, but interesting sort of technical move as well.
Nice. Well, it's the opportunity now to look at the constituents within the Aussie market, large growth companies. So Xero still, well, if you look at that compared to a bank or something else, the P's are rather different. They've had this massive drop. You've got this support line here that was breached like a previous low and then fell through that quite quickly to where it is today. Still north of where it was back a year ago in sort of that April-May period. Yeah. What would you look for here if the stars align, interest rates still look like they're going to come down, inflation sort of getting a lid on it, internationally at least? What would you want to see on this side of the chart?
Yeah, I think the Xero numbers there wasn't a bad number there. It was just a sort of slight sort of not a change of direction there, but I just noticed they're sort of starting to sort of cut some of the this business has sort of gone from being, revenue orientated, sort of profit orientated. And I think the last move there was sort of getting rid of sort of like a lot of these sort of idle or low income accounts there, sort of just sort of centralizing the business. So market didn't react too well to that, slightly negative number there, but it does sort of point to the business being a bit more profit orientated there, which sort of did trigger this move in the first place. So technically there, we've sort of seen that, we had that pretty large decline there, but we're seeing pretty solid volumes here for the whole week here, Chris. So even down after that sort of sell-off there, we've seen the volume sort of step in here. So it does look sort of signs of accumulation to me at these sort of lower levels there. So and you didn't sort of see the sort of follow through either. Well, started to sort of see a few high lows building here. So look, I might do a bit more work here, this one. But yeah, definitely one to sort of keep a close eye on here. I think if it sort of starts building a sequence of high lows here, could build a bit of a base. This could be one to sort of follow here.
Right. Well, the next one on your list, if we move down, you've got Domino's Pizza, which is a great success story from the Aussie market. Still trading around the $50 mark, well and truly off its lows, but a huge way from where it was 5-10 years ago. Good growth story in that sense, but you've got FB on the chart here, so minor false break. And then you've also got these parallel lines, so thinking possibly start as boxing maybe, or channels, but then you've got a broadening formation. There's a lot going on. What grabs your attention to where Domino's is now?
Yeah, two things going on there. So we've got a large sort of rectangle sort of set up there, sort of between that sort of 49 and 55 zone. And then most recently, we've got that little VCP sort of pullback there. So from that sort of that high there, that leg down there, yeah. So we had that leg down there. Then we've had a next leg down but smaller, and then another smaller one, and now we've sort of tightened right up again here in the last few days. So we've just gone above that little sort of lower high, a little bit wave break here for me. So I do like to sort of see those VCPs and then breaking above that high there. So, and we've seen a bit of volume come in at the lows, good volume on the surges here as well, then pulling back on lighter volume. So yeah, I think this looks pretty constructed there. It's just, yeah, it's gone side, it's a nice sort of tight sort of sideways pattern there. And we're just sort of starting to see a bit of congestion here this week here under that old high here. So, always love to see those tight congestions under the old high and break here as well. So do like this one here short term. I think, that sort of, that rectangle, we break out of that rectangle, Chris, that's like a $6 rectangle. So you're looking at probably $61, $62 sort of price target there on that breakout there. So and because we got sideways for quite a period of time here, it's like, the whole thing tightens up, you get a break and normally get a fast move here. So I think this looks pretty encouraging to me.
Nice. Well, that's another growth one. Macquarie, well, a very large company, a lot of international earnings in there. It's been on that downward slope. So we've got this overhead resistance, sort of downward sloping, but at least we've got sort of a higher low here. But this sort of pattern here, how do you decipher what's happened in this part of the chart?
I think we'll just sort of come back to sort of key support here, back to the sort of like mid 22 sort of lows there around at 155. So that's a big zone for me. I just sort of thought that was a really deep correction there back into the October low. So that really should be the deep low because of all our cycles, and then we're coming back and retest that, make high lows from there. So very good bounce there. We've gone sort of sideways for quite a bit of time and come back and retest the low. But what I really like the last 3 days is last 3 weeks there, we've seen some pretty good volume come in over the last 3 weeks. So that's pretty constructive there when I see there. And this is sort of one of the stocks. It's sort of trading on sort of similar multiples to the big four here, Chris. So this has got definitely a bit more growth than the big four banks here. So yeah. It's tend to be a bit of a higher beta play, this one. So, it does look quite good to me. Yeah.
Okay, well, going into a completely different segment of the market, Aussie Broadband, telecommunications. What's happening here? It seems to be more constructive throughout this period. If we just come from looking at what Macquarie's been doing since last October, we can see this has definitely been higher highs, seems to be more successful, a lot more greener and whiter candles. So what's is this bullish spacing that we're seeing here, or?
Yeah, so definitely a stronger trend. Where, definitely showing relative strength versus the whole market. Just had a pullback there. That interesting with that pullback there was just the volume through that pullback. The sort of 3 weeks down was really light. And that pullback through the whole period as well was light as well. So, and then look at the volume on the expansive parts as well. So we've had really good volume on that drive. And then after this, we've had 3 weeks down here, pretty light volume, sort of bounced. And then what's happened in the last 2 weeks is sort of big volume come straight back in again, buying this on your dip here. So not seeing any really great selling here. We are seeing, kind of commitment of the buyers to go with this on each of the rallies there. So I think that's pretty positive there. Look, maybe you get a bit more of a sideways action in here first, like some sort of flat ABC, but strong trend here, showing relative strength there. So it does look pretty positive there. I think it'll go back and retest this high pretty quickly. Whether it can push through there, maybe it'll congest under the high there. Maybe we'll get some sort of VCP or something in there, or who knows, a little bull flag or something. But yeah, it does look pretty robust.
Well, another one in the growth space on the ASX, still a large company, but this chart, well, if we look at the 50-day moving average being this red line, that kind of tells a massive story, doesn't it? The downward got back over it, but then it got dragged back under, and it's been coming back to retest these lows that you've highlighted here, undercutting them. So, like you've said in many previous interviews and podcasts, this being at this end of the chart and all this overhead, all this history can weigh heavily on the company. So what grabs you on this chart?
Yeah, again, it's just that obviously we've got that environment there where like a lot of the sort of the value shares have come back and retesting highs and lows and stuff all the time, and we're sort of going sideways. So we've seen so many false breaks here in the last sort of probably year or two. We've come back and gone to a slight new high, reversed there, and had a pretty decent rally there. I think we showed one on Ansel there a couple of weeks ago. It's already had a pretty decent bounce. Actually, look, just sort of the volume started to increase here last week as well. You look, you drill into the daily there as well. We've sort of really got some 3 big days up there, some pretty big volume there coming in at that sort of new low there. So look, it's a bit of a forward growth sort of stock, so definitely not showing relative strength, probably showing relative weakness here. But it's just interesting here that this former sort of growth stock has sort of come back and retested a low there and sort of showing signs of a bit of a bounce here off that level. So yeah, look, the beauty of sort of those little false breaks is, you have a pretty tight stop here at the low. If you're wrong here, you're not risking too much. If we get a nice bounce here and growth again, this could sort of go back to high levels there. We've still got that sort of mending relationship with sort of Australia and China here recently as well. So that's definitely sort of something which could potentially help in the A2 longer term as well. So just something to keep an eye on there. But technically, I'd say not the strongest stock, but seen so many of these stocks here recently come back and retest the old lows and bounce there. And just seen some okay volume here so far. So interesting that a formal growth stock is looking interesting as well.
Well, the last one on today's list, Jumbo Interactive. This is a chart you've looked at a few times and identified a few actions here. We've got this crossover, so sort of coming down to a bit of an apex, and around that apex, before we got there, we broke out and we've had this bullish flag come down, break down and touch it, where that apex is. So a bit of a confluence happening here. But these candles here are quite interesting, coupled with this volume. So what's the story happening here?
Yeah, look, it's pretty messy here so far. It's actually probably not the prettiest looking chart there, but just a little kind of long-term support zone there. Sort of oftentimes you break out of those zones, you come back and retest them here. So that's the case in this one here. Starting to sort of find some support. Starting to see a bit of volume going through here as well. So does have some history of sort of starting out messy as well. So it's probably, if I sort of saw this out of most stocks, I probably would leave it alone. But I just know that this sort of stock has got a bit of a history of sort of are building messy lows here. So I think that low there in might have been mid sort of September there in 21 there. That was pretty messy the first few weeks as well. So yeah, might be the next one there was like 3 or 4 weeks of sort of testing the low before it got going there. So yeah, so I do like this one here. I think it's pretty simple, sort of clean business, but yeah, I'd just be having my stop underneath probably the current low there. But when I see it go below, it's sort of 1350. But yeah, good upside potential there.
Well, there are a few of the charts that you've pulled out for this week's report. As you've said, you're looking for growth. Is there anything else that's standing out to you in the market that you're looking at in the portfolios? Because you've got, obviously, you go through your portfolio and you provide it at the start of each week's report. Is there an overarching theme or anything that you're still picking up or still exposed to in the portfolios that you're still focusing on?
Oh, no, probably just sort of, probably a little bit of a swing back towards a little bit of growth there. Just, yeah, even though some of those growth stocks actually, there has been quite a few of them actually that have moved pretty strongly already. But yeah, it's just worth it looking. There's definitely sort of pockets of growth there that have probably been a bit flat here. And, you know, if we're seeing that sort of IRL stocks have been pretty robust, so they're holding up here, and they're actually pretty strong at the moment. So they're sort of shooting higher here. So they're probably a little late stage, but still pretty firm. Likely to go higher there. The banks have had a pretty good bounce here as well, maybe apart from ANZ there. All the other banks are sort of have had a pretty decent bounce there. They've gone ex-dividend, most of them as well now. But yeah, I don't sort of see them shooting big games just because their business are pretty simple there. So I just think you'll start to sort of see the second and third tier sort of stocks start to perform here. So yeah, just looking at a little bit of growth there. So some of those healthcare stocks are sort of still sort of improving there. I think my Helios call might be in trouble there. That's they're going to raise some money here overnight here, so that's probably not so good for them. But yeah, I think most of the healthcare stocks are all looking on the mend there, starting to sort of head higher, so it's pretty positive.
Oh, very good. Well, they're the good breakdown of the markets, the indices, the overall international indices as well, understanding how they're moving, they're driving, and where the potential growth is or trading opportunities in the Aussie market. So we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary talks about the leading momentum companies and the launchpad stocks in the 30-30 list, whole playlist there on the right-hand side, and a playlist of some trading setups and strategies and research insights like how the 40s and 70s inflation, whole unpacking of what the US markets did throughout that period and how the inflation movements and the interest rates influenced what happened on the equity markets. Also, over on the left is Gary's X handle or his Twitter handle if you want to follow him there.